Hello, you're welcome to FinInvest Niger. My name is Tom Princeville. I'm a certified securities and investment specialist, and I've been investing for the past 20 years in the Nigerian stock market. In the course of this video, I would like to carry out a fundamental analysis of Nigerian Police Force Microfinance Bank. Nigerian Police Force Microfinance Bank. And this analysis will comprise an X-ray of the entire financials of the company, comprising the income statement, the balance sheet, as well as the cash flow statements. So let's start with the company's revenue, as indicated on the board here. The company made a turnover, sales or revenue of 17.58 billion naira, 17.58 billion naira, as against 3.583 billion, as against 3.583 billion naira. You could then discover that there is an almost times 4, times 3, almost 4 in the increments here from the value of 2024 to the value of 2025, approximately 4 billion to 18 billion naira. This level of growth is quite encouraging. That's what investors are attracted, by in a company. Usually, growth, very, very important. So for the gross profits here, the company made a gross profit of 15.766 billion naira, as against 3.096 billion naira. So from 3 billion to about 16 billion, that's an increment of about times 5. Okay, so that's quite excellent, from 3 to approximately 16 billion naira in a gross profit. We now move down to the company's profit before tax. So for the profit before tax figure here, the company generated 5.695 billion naira, 5.695 billion naira profit after tax in the year 2024, compared to 513.480 million, 513.480 million. This is about half a billion. So the company grew from about half a billion to about 6 billion naira. You could imagine that level of growth from about half a billion naira, okay, to 6 billion naira. This makes the company, a near perfect candidate for your portfolio. Now let's make progress. We now consider the profit after tax. Now for the profit after tax, the company generated 4.030 billion naira, as against 131.222 million naira. Look at the range of growth here, from about approximately 130 million to 4 billion, from about 130 million to 4 billion naira. So the growth here is really remarkable. Then same figure for the total comprehensive income, which is 4.030 billion, as against 131.222 million naira. Same figure as the profit after tax. Now, we've observed the excellent growth so far. We now want to come to the most important figure in this table, in the overall table. This is the most important figure, and it is known as the earnings per share. How do you arrive at the earnings per share? It's by multiplying the company's earnings, that is the after tax, by dividing the company's earning or after tax profit by the number of shares outstanding. So simply divide the after tax earning here by the number of shares outstanding. That will give you the company's earnings per share. So we don't only focus on earning per shares, more importantly, focus on the growth in earning per shares. Of course, there's a growth here from 26 kobo to 76 kobo. This growth is almost, it's more than twice, it's more than times 2, it's more than 100%. So whenever you come across a company with more than 100%, level of growth, that company is a good candidate for your investment, a good candidate for your portfolio, as you could observe here, from 26 kobo to 67 kobo. Now we are through with the profit and loss section of our financial statements. We now want to go to a summarized skeletal version of the balance sheet as well as the cash flow statements. All right, and so let's start with the cash flow statement here. Discover that the company has a cash position of 19.755 billion naira. 19.755 billion naira. That's a mark of excellent cash management, cash at hand, cash in the bank, cash in fixed deposit, as the case may be. Now look at the cash position here, approximately 20 billion compared to the company's profit, which is 4 billion naira. That means the company has a cash position of about 5 times its profit level. This is truly remarkable. Now we move up to the equity, the company's equity. The equity here simply means it means you subtracting the total liabilities of the company from its total assets. All right, total liabilities minus total assets, as the case may be, we give you what? We give you the equity, which is 14.99 billion. And what the significance of this particular figure is telling you that the company's balance sheet is very strong. Look at the level of equity here, almost 15 billion naira. It's a very strong company. It's a company with a fortress balance sheet. We now move to the upper part of the table. We are considering the company's share price. The share price here is 6 naira 5 kobo. 6 naira 5 kobo, and the shares outstanding for the company is 5.99 billion naira, or rather 5.99 billion. That's the number of shares outstanding. Usually the lower the number, the better, and the higher the number, it would certainly affect the earnings per share. So we now go to the market capitalization. So you simply multiply the company's share price by the shares outstanding. That will give you the market capitalization of the company. And what is the significance of market capitalization? It's telling you how big or how small the company is. So in this case, the figure here is 36.3 billion 3 billion naira. So it means that if you have 36.3 billion, you could buy the whole company. Okay, or if you have 18 billion naira, you could buy half the company. So that's the essence of market capitalization, to show you precisely how big or how small the company is, or if you want to buy the entire company, whether you'll be able to buy it or not. Okay, so we now move down to the PE ratio. The PE ratio simply means the price of the company share price divided by the number of shares outstanding. Okay, so divide by the earnings per share rather. So in this case, the share price is 6 naira 5 kobo. 6 naira 5 kobo divided by the figure here, divided by 67 kobo. It will give you 9.03. That is the PE ratio. The PE ratio is telling you about the value attached to the company. Is it very cheap or is it very expensive? That's the function of the PE ratio here. The higher the number, the more expensive the company. The lower the number, the less expensive the company. And of course, you make comparison with other companies in the same sector with this particular bank. You don't compare this company outside its sector, although you could roughly make comparison outside the sector, but the rule is that it should be done within the same sector. So you compare this PE ratio with other companies in the same sector to determine how cheap or how expensive this company is. To make a ranking, as regards this company, make comparison with others in its own sector. That's what the PE ratio is all about. And considering all what you've done so far, I'm so impressed by the increase in all the parameters stated here, in turnover, in in gross profit, in profit before tax, profit after tax. You could realize that the level of increment is just very high. Some more than times three, sometimes four, thereabouts. So that shows you that this particular company will do well in the near and distant future. All right, and so I will place a buy recommendation on the company. Although all what we are doing here is for entertainment purpose, as a disclaimer, is an academic exercise. But if you so wish and you want to key into the prospects of this company, you could make it a part and parcel of your portfolio. So if this particular uh, returns continuing to the distant future, near and distant future, the share price will go beyond 6 naira, probably to 10 naira and above in the next 12 months and beyond. Okay, and so please, I will solicit you, subscribe to this channel, share this video, like this video as well, and also key into other videos in the channel so as to be better educated about the process and procedures involved in investment in the stock market. So thank you very much for watching.